What is the difference between revenue and profit? Look, if you've made it through high school, whether you did an undergraduate degree or not, we actually have an education curriculum that never teaches business owners what is revenue and what is profit and how are they different. So we're going to tackle that in this video, and you're going to walk away actually feeling like, okay, I get it. It makes sense. So revenue and profit are both concepts that live on a piece of paper that we call an income statement. All right, it's literally one piece of paper that has caused fear and trauma in people where they're like, haha, numbers, keep them away, they're so scared. But you don't have to be scared of it, okay? So it is a single piece of paper. We call it an income statement. Some people call it a profit and loss statement. Some people call it your P&L. Some people call it your earnings. Literally, it's one piece of paper. And on that piece of paper, there are two types of data. There's data about your money coming in from your customers, and there's data about money leaving your company, expenses that you are paying out. Those are the two pieces of data that are captured on any income statement. And then you've got a whole series of what we would call subtotals, okay? The subtotals is what ultimately ends up throwing people off because we, in accounting land, sometimes make things a little bit more complicated. So we embed subtotals like gross margin or cost of goods sold, or all of these different terms that we come up with, EBITDA, or we'll kind of say like operating profit. All of those things are nothing more than subtotals. They're nothing more than revenue less expenses equals bottom line. So you might also have heard this kind of expression about top line and bottom line. If you've ever wondered why, there's no really good rhyme or reason other than historical convention. So on this piece of paper, the accountants of the world just kind of had a habit of always putting revenue at the very top. It just kind of morphed across time. It's just the way everyone has always been doing it, that you put revenue, which is the sales from your customers, it's the money you made providing your actual business. We put that revenue on the very top. And then below that, we start listing all of these different expenses. And we categorize the expenses in all different ways, but we start listing all these expenses afterwards. So what you end up with is top line revenue, less all these various different expenses. When you remove all the expenses at the very bottom, you have your net profit. And that's pretty much the only distinction between revenue and profit. And you can think of profit as your bottom line end of the day, meaning that number is always going to be lower than your top line revenue. So one of the things you want to be careful of as a business owner is there is no sense in growing your top line revenue, you're seeing your sales going up, if your expenses are growing faster than your sales. Because guess what will happen? If your revenue is growing really fast, but your expenses are growing faster, what's going to happen to your bottom line profit? It's going to be worse off. So you need to pay attention to both revenue and expenses so that ultimately you get profit at the end of the day that you can keep for your business, for your family, for the overall mission that you're trying to accomplish through your business. Okay, got it? Revenue, profit, top line, bottom line. Simple.